Hey guys, welcome back to another video. Today we're going to take a look at Kroger. So as always, starting off with the PE ratio, it's currently at a 34.15, which is not too good because the goals look for companies with a PE of about 20 or less. So this is something important to look at because it shows how risky the investment will be. Now, seeing if they offer any dividends, they do. They have a dividend yield of 1.85%, which comes out to about 21 cents per share that you own. And it's always nice to see companies give back to their investors when given the opportunity. Now, before we get into the income statement, I want to see what their gross margin and return on invested capital is right now. So the gross margin's at 21%, which is good because you don't want to see this be lower than 20%. Then with the return on invested capital, it's looking solid at 9%, as you want this to be at 7% and above. Getting into their income statement, we're going to start off by looking at the revenue. As of the most recent year, they're bringing in 132 billion, which is up roughly 17 billion from 5 years ago, so this is great to see. They've been very consistent with this, so I'm pretty confident this should be sustainable for years to come. Now, checking out their net income, the net income is looking a little shaky. So overall, they are up, so I won't complain too much. Let's just hope to see this get better in the future. And the last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it's been going down very well. It's currently down to 773 million from the 942 million 5 years ago. Now, moving into the balance sheet, we're going to start off by looking at the current assets. So, their current assets are looking great as they've grown to 12.5 billion, which is an increase of 21% from 5 years ago. Now, with their current liabilities, on the other hand, it's looking like a red flag because right now they're at 15.37 billion. So they basically have 3 billion more current liabilities than current assets, which is never a good thing to see. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. And as you can see, it's looking amazing. They're basically doubling this every year, so let's just hope they can keep this up. In conclusion, Kroger is so close to having perfect financials. The only issue I have with them is their balance sheet. They have more current liabilities than current assets, which does not make me feel comfortable enough to put money into this right now. A good price target for the stock, in my opinion, is probably around $35. And two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. If you enjoyed the video, feel free to like, comment, and subscribe. Otherwise, thank you guys for watching and have a nice day.